I'm Jamie, this is Tradespotting, and this is a clip I've made during a live stream. I've started this intro a number of times and it's not quite made it through to actual technical analysis, so let's see how it goes this time. If you like GME and you want to learn about how to empower yourself via technical analysis, then you'll probably enjoy my channel. Check it out sometime. If you're watching along later and this isn't a live, if it's on the same day I've published it, then you'll likely find me after you're finished, still doing the same thing and chatting and answering questions. So feel free to join that stream or another one. It'd be great to see you. Thanks for stopping by. If you like and hit like, that's appreciated. Bing bong. The price is wrong, but what is the price? It's 190.58. Here on the weekly time frame, you can see we've gone through what many people have described as a cup and handle, and it certainly does match the criteria for one. Our cup with handle has come down to what is 236 on one Fibonacci. Across here at 618, got 618 down here. It went between these various levels for the last couple of weeks, and volume's been very low. Volatility has picked up from one day to the next to a slight degree, but not to the point where we've broken any significant support and resistance, certainly not on the weekly time frame. You can see that we're below the 9-period moving average, so on a weekly sense, we're not in its most bullish possible posturing. It's also got a negative slope on it at the minute, so we would like to see that start to turn around. Is there any sign of these things happening? Well, it's the start of a week. So where would prices need to take us in order for that to happen? Well, we'd like to finish perhaps above the candle of the previous week, so in around 204, 205. And frankly, that's not all that much of a big ask. And that would start putting a positive slope on the 9-period moving average. We'll also be getting rid of some of these candles over the next wee while and replacing them with higher ones. So this will have actually like the path of least resistance on the 9-period moving average is to start sloping up. If prices start moving up along with it, then it could have some momentum, which is what we like to see on trending moves. So for example, here we were below it previously. There was no open close below it. There was actually a bullish engulfing candle on the weekly there. And will that be something we experience this week? Well, on the weekly time frame, we can see that above us, along with candle closes, which may be called support and resistance, traders brought the close of that day and that week in and around those levels. So you could say that would be resistance with that price above us in at that 204 level. Then afterwards, you have a couple of Fibonacci's, one at 207, and then the golden pocket of the current retrace we're on from around 212 to 215, which is also confluent with more opens and closes, both on the weekly time frame here. But that's really where, along with these other rays, you can see these horizontal rays. These are from Fibonacci's on other areas of the chart, which we could talk about later. I'm sure we will as we drop through the time zones. Zones, periods, pardon me. And as you can see, there's like a sort of dearth of action in and around these levels. Once you've broken this sort of level, although you've got wicks, they do all come all straight all the way up to this 382 on one of these Fibonacci's, and really it's a full retrace on this wee drop down we've had, and it's in around 228 to 232, that sort of area. If we can open and close 4-hour candles above there, your weekly could go all the way higher to 277, 275, and that's the sort of things that you'd be looking at from this point of view right now. A lot of people have been sending me messages and saying like, oh, price to 400 this week and X, Y, and Z, and what do I see on that front? Well, what I would say is that 400 sounds like a nice number, but it doesn't show up on my charts as being like a round number exactly that we're likely to hit. I would say that if we come back up here and start putting in the sort of really, really bullish moves that some people are anticipating, it doesn't necessarily have to finish the week up at those levels, but it could retrace back down to our previous support. But if we do have something crazy, like, and I say crazy as really extreme as represented by the charts, then the technicals say that 268 to 277 is in and around where you might first look to that. if you start breaking those levels, then you've got other support and resistance stopping you, maybe closing high, but that doesn't mean to say that there'll be a lot of orders there on the first pass, and quite easily prices could come up to the 414 extensions, and the ones that you'd be looking at from the dominant fibs are miles up here, they really are, right? So like if it does do like a crazy move, you could be looking up at 700-800s and that sort of price, before some sort of a pullback on a weekly close, and so, but that's like gets people excited. And before you get there, like I'd be like to be quite clear about the fact that there are very obvious targets ahead of you in around 480, 343. Around 277, as we said, and then even getting there, you've got to get past this obvious level of what would be resistance. Now, if you do all those things one after the other, sure, you can just work back through them chronologically, and you'll see what's next. It's all reasonably straightforward, and it's all based on historical price action, right? It isn't based on predictive technical analysis indicators, because those are fake. And if you're buying them, sure, you might as well be drinking snake oil or eating Tide Pods, right? Because that's not what technical analysis is for. And one day it will trip you up. So that's that. That's on the weekly. And let's go down to today and see. We've drawn out some moves there. We've said, why did we draw these out here at the time? We were talking about the relative range of the candlesticks that we'd come through. We were also talking about where prices are likely to move within these zones. The size of the body candles on the 2-day time frame with opening closes. And you'd likely get 2 to 3 of these in a week, obviously. And so a week's worth of price action, can easily be these bigger candles, but you're like likely only going to get like something similar to what you've gone through before, but that doesn't say all that much in terms of the restriction us from what we're looking at. Daniel Assange, $10, thank you very much. I don't care about golden pocket retracements, only golden shower retracements. When can I expect the golden shower retracement? Quickly, I'm paying customer. Well, Daniel, golden shower retracement. Let's call this would be your down move, and you're looking at that. Let's call that the golden shower. Let's ignore this golden pocket up at 276, right, which is very interesting price target. And you can't emphasize that enough and say, well, let's make it rain. Yeah, let's make it rain above that. Yeah, it's 520, right? So sure, like people are talking about 400, but if you break 276, you're looking at 460, and then you're looking at 525, right? And beyond that, then you're actually across here, and you're looking at like $1,000 and $1,463, and those are your next targets if you break these levels. And if you think that sounds crazy, you're probably not going to like all the things I'm about to go on to say. So when you got down to the 2-day time frame, you look at this sort of candlestick range. Thanks very much, Daniel. And you think, well, that's not unquestionable. It's like quite similar to what we've gone through before. If you look at across here, you can see the support and resistance all match up with that. That's not a coincidence. That's obviously like as a result of each other. And where are they confluent with? Well, it's not just these particular horizontal rays don't come out of my bum, right? They also come from support and resistance. They come from 618s and other Fibonacci's. You can see them here drawn in. If you're interested in seeing a lot of this sort of thing, tune in for a live stream, right? It won't all fit in a clip, especially when I'm going through every time frame. And you can see that here's your 236, it's a yellow, and here's another 236, here's your 618s, here's your 236s. If you're wondering how I set them up, you can like quickly pause the video, I suppose, and say like, here's the Fibonacci levels I've got that I think are relevant for GME. There are others, but these are the chief among us. These are those that dictate price action to a large degree. If you want to see why, tune in a live stream sometime, and I mark them out with different colors for various different reasons. 0.618 now, that should be yellow as is on those previous fibs, but you didn't see it in that list. Now there it is there, and you can pause that and look at that, and that's the fibs that are relevant for GME at the minute. If you're watching a clip, then yeah, great. And so, right, 2 days, talked about the relative range candle sizes. You can see again that this is like slightly clearer aspect of these Fibonacci's right at the minute. This one here, this is just from our breakdown zone, and this is like clearer why it's here. On smaller time frames, but the one that's obvious on this time frame is this 236 here, which is this 618 at the top of it. Right now, this comes from our most recent high down to our most recent low, encompasses the entirety of this trend plus whatever sort of a bounce we may or may not be having right now. Prices are at 192.50 now, and I was saying that this could, because this candle just opened just high enough into this one here, that this can now start putting in, like if it puts in 3 subsequent bullish candles, especially if the third one of those or beforehand we close above 204.70 on this 2-day time frame, that'll be a pincer recovery. It'll also look like a fake out drop and could easily confirm this whole thing as a bear trap. And if you do, then prices are likely to take big jumps, and that all matches up with our volatility indicators. And what it says is likely to come over the next short while. So yeah, so this is our Fibonacci that we're looking at. It's like on the 2-day time frame, you can see between the 382, between the 236, and down to the 618. That was all fairly obvious. On the top side, you've got, when you get above the 236, your 0.5 comes in at around our previous levels of resistance when we broke out of it, or came up to the top of this cup side of things over here. And then the levels you're really looking to are the 618 and the golden pocket above. Right now, like I say, it's 267 to 277, and that's the area you'd be aiming for on a close above 208, right? So you're like, oh, could go up like 60, 70 bucks on one candle if we just close a candle here that's up, 15 bucks. And that's not as that fits with our Fibonacci's. It fits with these levels of horizontal support and resistance, and it fits with the average true range of the candles that have come before, right? Which is easily by these things here, which are these candles of lengths over here, and they fit in nice and well between these various levels. And you could look at them and draw in more horizontal lines and judge trisection, smaller time frame if you want. We're going to drop down, could look at the daily briefly, but whatever. Yeah, so you can see more clearly now the 236 and the 618 of this little fib that we've got between have already come up to it, that sort of area, a couple of times. Close this gap, that's what we wanted to see. Let's move this across so it's not in the way. When we come up, see, so we want to close that gap, and that'll give us what? Move to around 199.50, 2425. You can expect to see that really easily, and then 201.50, touching, at least coming up to this, touch this 618 or 200 type of area on a daily time frame. Could easily do that today, and it would mean nothing, be easy, right? It's about closing above there. See if it gets up there and completely collapses, that'd be different, but you've got so many different things below it to catch it. 186. And this sort of time frame, now that we're looking at it here, you might be thinking like, well, what is the best entry to get in today? Or, it is a daily time frame, so maybe you could stretch that over 2 or 3 days. But below us, you can see that along with the 236, we've got a previous our highest low with regard to a wick is at 187.50 or so, then down 186.70. Beyond that, you've got a 100-period moving average on the daily. It's coming in at around 185, and then below there, you've got a body close at 179. And I'd say any of those areas would be fantastic based on the fact that there's like very, very little likelihood of them happening. Like this is putting in, like I say, when you're looking at the higher time frames, you get 3 positive bullish closes from this beginning, which again has managed to finish within the close of this here. Then you'll put in, like, this will be hugely bullish engulfing. This would be so positive if this plays out. And and I'm talking about higher time frames, and on the way there, it can do it out. It can do it on every little one, and then that's why they call it a pincer recovery, because you look back and it looks like 2 sides. One's purple, the other one's blue in this hand side, so red, green, whatever you're going for. We'll drop down to the 4 hour, and this is a really good time frame for doing technical analysis on GME. Because it tends to move. The candles tend to stick really cleanly within your levels of support and resistance and move between Fibonacci levels. Your predictions, let's call them that, can be relatively robust on this time frame with regards to body candle closes and opens and closes, and also wicks, which we'll go on and take a look at in a minute, or I'll have a drink and you can see it there. It's dead obvious. So I've been trying this new breathing Red Bull. Doesn't help. Doesn't help at all. Pardon me. Need a pop filler. Oh, you need a pop filler, Jamie. You need this. You need that. Well, trust me, I'll do it all. If you, what I really need is watch time. Um, right. So look, we're in this smaller time frame. You can see that up at this golden pocket of the Fibonacci that I've drawn out that we're in at the minute. I've got a little green box. And that represents like a liquidity zone. There will be orders coming in on both sides of the trade there, and volume will be higher there than it will be here, despite the fact that I'd say this would be a better entry. You know, you're tested the 200 on 4 hour. You've got like obviously bullish engulfing starting here. There you go at 197. Bing, bing, bing. Like I usually do. Traditionally, I do this at market close just so that people can see the predictions coming true as I make the clips and whatnot. But here we go, making an early clip, and we've got the same thing on the go, right? And like, what did I just say? Well, if you don't remember, you can rewind it 2 minutes and you'll look at it and you'll see where prices are going to. Or, I don't know, maybe it's less time than that. Anyway, so this is a bullish engulfing candlestick pattern. It's also putting in quite a clear trajectory on it. It's a great reaction between the 236 and the 6, and the, pardon me, 618, 236 of this Fibonacci. You know, you break it, you're down to the 618. Which previous levels. Pardon me, but what does it matter, right? You don't need to understand me all that clearly, right? Just when I say the numbers, 197.04. A big buy, says somebody. Big, big, big buy. A big buy, right? Well, somebody tuning in this channel, likely, because there are quite a number of people who tune in this channel who've got quite a surprising amount, number of shares. It's hilarious, to be honest. Right, so like I say, it's the story of the 236s, 618. It's hodling down the line, guys. Thank you, Tradespotting. You're welcome, buddy. Gaston, you're a legend, mate. Thanks so much for all your support. Yeah, keep hodling, right? You know, you're doing all this hard work now, and it has been hard work persisting through this downward price action, mentally fatiguing, I understand. Don't like put that all that hard work, don't think it's paid off just when prices get like back above your entry or back above where they were like a couple of weeks ago.
The voices.
This is the beginnings, right? This is the beginnings. So people are telling you like, we've already won, so somehow that means the story's over. It's like, nah. I mean, how many stories have you guys read, right? That's not how stories work. And this is the greatest story ever told about the greatest show we've ever seen. Trademarked. 195.63 is like a very good level on this time frame. Finishing above the 9-period moving average would be great. You open and close above there on the 4-hour time frame, which we've got 3 hours essentially left of. So it may well be that we see some price action higher than that before we return here. But I'm not going to predict every move by the hour for the whole day, because trust that you half of you will turn up and think I'm a witch and you'll drown me around the corner, right? Just to test your theories. And I know how these things work because I've seen it myself. Right, so there's your 4 hours, and you're looking to recover these areas, right? You get an open and close above 201, that'd be fantastic, but that'll take us till the end of today to confirm those sort of things. So what do I think about that, as if it's realistic or not realistic? Well, I think it's very, very, very realistic. It's very realistic. Yes, so your moving averages, that's one of the things that change on this time frame. We can also take a look at the DMI. And what does the DMI do? Well, Rocky Outcrops DMI, along with measuring the strength of trend and identifying the dominant trend and showing you divergence, also gives you a hint with regards to volatility. Now, that hint isn't as a volatility momentum, but more so as an incredibly accurate tool for predicting price moves, which can go, and I've seen him do it on Bitcoin, do in seconds, say, here's the move, and it's going to move 15%, and then it's going to come back, right? And so it moves 15, comes back, right? So about 30% move in total, and does it nearly to the cent. And now, if you don't know how this indicator works, and that, generally speaking, it's one of the best indicators you can use anyway, just base levels, with all the little additions he's made to it. It's just super simple to use. Now, when I say simple, I mean it's simple in terms of it makes what is previously very, very complicated, complicated picture really accessible to people who are even beginning to use. So I think it's fantastic. And on this indicator, you can see that your ADX has come down. It's given us the best signal for a new trend beginning. We can see that previously, like with the higher low a price action coming in lower. Our ADX now starting to turn around. As that was happening, there was a new trend coming as we were making that low. So that means, to my mind, that any volume we see since is starting volume, that the trend is now going to be in the ascendancy, is the bulls, and you can see that with the positive slope on the DI plus and the negative slope on the DI minus. Now, it is quite hard to see that, especially if you're in a really brightly lit room like I am. So I'll just like briefly flash the color there. You can see it has blue. You see it's taken a severe downturn, right? Whereas the green one at the same time as the AD plus, it's picked up. DI minus, it's dropped down. ADX strengthening at a very steep angle, steeper than previously, with the same sort of excellent signal with regards to price action. You can see the crossover and how that went here. You can see how it turned out to be really, really high. That was on the 26th of May. And it looks like we're getting that same signal given on the 4 hour here, 26th of May. Web prices on the 26th of May. Bump, 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 that sort of thing, right? So you're getting this sort of a move, right? That sort of thing, which was how many dollars? 139 to 206. So 100% increase in price coming from the sort of signal that this is starting to give now, having previously told us that there was going to be this sort of a drop. Right now, that sort of an indicator for free, fantastic. And not only does it come with free, it comes with lifetime customer support and lifetime educational backup from Rocky, who does this 24/7 on his channel, and all he wants to do is help people. It's quite incredible. So that's the 4 hours. Got a good picture of what's going on there. You can see the targets like even more clearly with the gaps between them, and understand why we'd see price action moves in such violent and large candle body open closes in advance, right? So when everyone gets all excited about X, Y, and Z happening, and that, it's like you can say chill your boots. We already knew all this was happening because we understand the technicals. Or at least I saw it on the internet there one day, right? So 15 minutes, 194.40. Do I think that that's a pullback that will be bought up? Yes, I do. We're above again on the 15 minutes. You can see now touching the 9-period moving average, as we've got a positive slope on a number of them, crossing above the 55, crossing above the 100, dink off the 200. We normally do that. It's also coming up at the bottom of that gap. Let's go up there and fill that to around 299.50, 98.50. Then we'll go on up to 201 areas, touch that, and see how we come back with regards to this. 200 is likely to surprise support, bouncing back and forth. And we'll not make too many predictions on it yet. And Jamie, why don't you stick on the VWAP? Because what the I mean, are you day trading this? Are you? Are you taking trades on this that you're going to do on a maximum like the 15-minute chart, and you're going to hold for maximum 3 open body closes on that chart? Otherwise, there are so many better tools to do your technical analysis on. Now, come on, let's fight. Let's fight, TA people. Come on, fight me, TA people. Come on, right? Now, it's just an honourable fight, right, where we just pit ourselves against each other, use price action as a judge and that. Come on, fight me. Somebody. And why is this one not go the full way, Jamie? Well, look at the support and resistance over here, right? It's at once, and then it was twice before it broke down. It was another breakdown. It was twice before it broke up. That was obvious, and it also does it here and here and here. Right? So there's that. 15 minutes only, but that's what you got. 194.40. There you got the 200 touching there. That's that coming down. And we've talked about price targets. We've talked about where things are likely to go in the weekly and 4 hour. We'll work down through these things. We only really looked at the Rockies outcrops DMI, but then what more do you need, right? It's fantastic. I mean, we could also talk on other things, right? Now that we're here, we could turn on, let's say something simple. Some people like simple little things, right? Simple. There's the MACD. Zoom out, give us 30 minutes, see what it says. Right, price action below the 200. We need to get up there. Looks like that's where we're headed. I can see it happening in one big candle like that, as we've talked about. The MACD is giving us a positive cross down here. Is that a buy? Well, the momentum, the divergence, possibly it is, considering the divergence that it's put in. And the other things that were going on with that trend on the higher time frames, it certainly was a buy for various reasons. So, let's say that that's confirmed. We'll need to see. In my mind, if you have not yet bought this yet, you've got 2 ways of entering GME this week. Waiting for a retest of 191, or all those levels we talked about at the start of the clip. 191 would be what I would think would be the, if you're not greedy and you just want in, that's like below where it is now and you'd be happy with it, but you might not get that, right? And it might be that today's the last day you're able to get below $200. It may well be. It'd certainly be good for the bullish thesis to see a lot of days subsequently closing above 200 en route to the 16th of July. That would be really, really positive. Can you show me the fib circles? And I used them, watched the video last night, just wanted to see live. No problem, Jam. I'll definitely do that. I'll finish this flipping and slap them out. And if you're somebody watching along and you want to know how to do any particular type of technical analysis, just come on and ask me and I'll do it. And I'll do it on GME for you too, so you get a full broad picture. And maybe you're good at something and you want to see how somebody else does it. And if you're good at it and you want to tell me stuff and I can learn, then I'm all open for that too. But there isn't anybody like that out there, is there, yo? Thanks very much for tuning in. Thanks for stopping by. If you're a subscriber, love you. Thanks. Watch time, likes, comments, all that stuff, really appreciated. And if you're just stopping by and you haven't met me before, well, it was great to introduce myself. Why don't you come and introduce yourself on a live stream? Be great to see you. And if I can help, I certainly will try. Thanks. That was Tradespotting. Oh, I'll play that music. Yeah, I've got this song. It's amazing. Bing bong, the price is wrong. Bing bong, price is wrong. See you next time. Bing bong, the price is wrong.